Okay. Online students audible? Yes, na, great. Okay. Now guys, the preliminary chapter is completed. Now we are going to start with a very chotu sa topic, very chotu topic, small chikka. What do you say, chikka, right? Okay. Chikka topic. Now what is that topic called as? The name of the topic is distribution, sorry, declaration and distribution of dividend. Declaration and distribution of dividend. This is chapter number 8 in your book. The sections which we'll be studying in this lesson. Now just for your information guys, I did not tell it in preliminary, or I have told it but I don't remember, that in Companies Act 2013 in your CA inter syllabus, we have section number 1 to section 148 in your syllabus. Obviously some sections are omitted by ICAI, some are not that important. So roughly around 140 sections you have to study just of Companies Act. Okay, so have good soda and all, ticket to Gulpipad, that it will help you to digest these things. There are 140 sections we have to study. Out of 1 to 148, the sections which, yes, you did not get, no problem. After one lesson we finished now, I'll share it. The sections which we will be studying in this chapter is section number 123 to section 127. So how many sections total, you tell me? I knew it, you will tell 4. No, 127 minus 123, you did 4. It is 5. Okay. Now this whole lesson is about dividend. In this lesson we will understand what is dividend, what are the types of dividend, when is a dividend given, declared, and if it is not paid, what will happen, what is the procedure of paying dividend. Every damn thing related to dividend will be covered here. A very chotu topic, but yes, very technical topic. And at the end of the lesson, I have one good MCQ for you, and that MCQ, this kind of MCQs will come in your exam. Okay, so that MCQ also will solve. Let's see. Now the whole lesson is on the word dividend. Sir, what do you mean by dividend? First thing we'll understand that. Now if I ask online student, please answer, what do you mean by dividend? What do you think is dividend? What is dividend? What is dividend as per you? Paid out of profits. Okay. Okay, good. So or more or less everyone is trying distribution of profit. Yes. Okay, so I'll write here your answer, distribution of profits. Distribution of profits. Okay. See what is the point? You are correct. You are correct. But we are professionals. We need to answer in a bit different way. So how will we answer? See, what is dividend? Let's understand. See, everyone works very hard in their life. Almost everyone. Some people are blessed not to work hard. Some people don't want to work hard. Both are blessed. Okay. So I also work hard. So my daily income is 100 rupees. Okay, very poor person I am. 100 rupees is my daily income. See, out of that 100 rupees, 20 rupees goes into my food expenses. 20 rupees goes into my family expenses. 20 rupees for my child's education expenses. 20 rupees for my wife's makeup expenses. Yes, are very expensive. Girls might be knowing, boys you don't know. We know only of talcum powder, Pond's powder, 40 rupees. But girls expenses like makeup expenses are huge. Now, so for 80 rupees is expended, 20 rupees is with me. So today is the era of not savings, it is an era of investments. And I know that if I keep 20 rupees in a cupboard, it will not lay eggs and it will become 40. So what I'll do, I'll invest. There are various modes of investments, various options I have. First, like a true Indian, Happy Independence Day. True Indian, I will do FD. Yes or no? And FD will give me returns, interest. Second, what I do, I will give this 20 rupees a loan to someone. So I'll get interest, provided I get the loan repaid also. This is India. Yes or no? Third, I can put it in a business and business will give me returns. Fourth, I purchase debentures. Debentures will give me return, and at redemption also it will give me money. Out of all this, I decided I will invest in shares. I'll purchase shares. Now, all these options, investment options, give me some kind of returns. So shares should also give me some kind of returns. So shares give me two types of return. First is a revenue return. Shares, what do they give me? Revenue return. And second is capital return. Now first I'll tell you what is capital return. Capital return is nothing but capital appreciation of the price of shares. 10 rupees ka shares I purchased. At the time of selling I got 100 rupees. 90 rupees is capital return. And I always say, beta, India is a developing economy, you should invest also. Like just for an example, I'll tell you. In 1991, my dad purchased a TV. Name of the TV brand I still remember, Nelco TV. He purchased for 13,000 rupees. How much? In 1991. If he had not purchased TV of 13,000, but if he had invested this in a company shares called as Wipro, and this is actual calculation I have done. Today, what will be the value of these shares, 1 crore, just go up. 2 crores, go up. 10 crores, go up. 100 crores, go up. The value of the shares today is around 568 crores. This is the power of investments. That is capital return, yes or no? Yes? And I told my mom about this calculation, and my mom had given dowry to my dad's family, 15,000 in 1986. I told mom, if you have invested this money in Wipro shares at that time, how much money you would have gotten? I told her this calculation. What I thought she would tell, I got your dad, he is more important. What she told, shit. Yes. So, this is the power of investment. That is capital return, yes or no? But capital return is one time when you sell the shares. But all these other options are giving me every year interest, something in return. So, share should also give me something in return every year. What is that, beta? Dividend. Like company uses my money, and by using my money, company is earning profit. A part of the profit company gives to me. That part of the profit which company gives to me is nothing but dividend, as you people do. But it is capital or revenue in nature? Revenue. So basically dividend, if I say, it is nothing but revenue return on shares. What do you say, beta? Revenue return on. See, what you told is also correct, but via professional approach. Okay, we gave this distribution of profits, and this is revenue return on shares. So everyone in the interview will say, sir, what is dividend? Distribution of profit. What we will say? Revenue return on shares. A class. There is a class answer. Yes, sir. But this is the explanation of dividend. Correct. We don't have to write explanation in the paper. We have to write beta definition, legal points in the paper. So we have to study the definition also. So what is the definition of dividend, guys? Section 2, clause 35. What is section? Section 2, clause 35 tells us what is dividend. You know what is the definition given? Beautiful definition. Dividend includes interim dividend. What is this? स्टॉप किया और ये चालू कर दिया. Dividend includes interim dividend. Yes, sir, what is the definition? Do you remember I told in law, some lovers tell, what I speak everyone will understand, but I want a lover who can understand my silence. This definition is like this. Sir, dividend includes interim dividend. Sir, what does it mean? We didn't understand the definition, sir. So actually, what is it trying to tell now? What is the lower trying to tell? It tells final dividend includes interim dividend. What is it telling, beta? Final dividend includes interim dividend. What does that mean? Understood, sir. Final dividend includes interim dividend. But what is it trying to tell? It is trying to tell that the rules and regulation applicable for final dividend is equally applicable for interim dividend. The rules and regulation applicable for final dividend is equally applicable for interim dividend. Just remember these words. Like in the later part of the lesson, but these words are very important. So this is what the definition is trying to tell. Dividend includes interim dividend. That means the rules and regulation applicable for final dividend is equally applicable for interim dividend. Am I clear? So sir, by this up till now I understood there is no one type of dividend. There is more than one, final, interim and all. Yes, that is the reason the first topic which we need to understand here is classification of dividend. Do you remember we studied classification of company on certain basis? Here also beta will be first studying classification of dividend. Once we finish that, then we'll go as what the law tells. Up till now law has not started. First we'll finish the introduction, then we'll come to the law. That's it. Sir, let's understand the classification. So there are two bases of classification of dividend. Two bases. First, on the basis of time. At what point of time you are getting dividend? On that basis we are classifying. Second, on the basis of shares. On which shares you are getting dividend? On that basis we are classifying. What is the two bases, beta? First, on the basis of time. And second, on the basis of shares. Very good. So let's understand. And here now guys, there are many questions which you can ask me. It's a big area for asking question. Let me see how many of you ask question. So first is classification of dividend on the basis of time. Now here there are two dividends which the book tells us. First is the exact thing which we studied now, final dividend, and second is interim dividend. Interim dividend, final and interim dividend. Let's understand. Now guys, pay attention. Sir, what do you mean by final dividend? First, but a final dividend means a dividend which is given after finalization of accounts, after completion of the financial year. So once the whole financial year is completed, the financial statements are prepared. Okay, at that time company knows how much profit company has, and a part of that is given to the members. That is called as final dividend. Am I clear with this? Now I'll tell three statements. Afterwards I'll write it, but understand that flow. Final dividend is a dividend declared at the annual general meeting. It is declared by members and it is recommended by board of directors. I'll write also, don't worry. See the flow. See the flow. As on 31st March, your financial statements are prepared. Then a board meeting is taken. In that board meeting, these financial statements are approved by the board of directors and signed. Then this financial statement goes to the auditor for audit. Auditor will do the audit and give auditor's report. After that, again a board meeting will be taken. Two board meetings. First we took, now second. In this board meeting, board of directors report is prepared. Have you heard about board's report? Director's report. Okay, board of directors report is prepared on the basis of auditor's report. Board of directors report is the report card of the company. What all big things happened, it will be mentioned here. So basically, sir, why board's report is prepared on the basis of auditor's report, I'll tell you. See, auditor will do audit on the basis of financial statement. Now, if the auditor has given some remarks, who has to answer to that remarks? Board of directors, because they have approved it. So they will answer in which report? Board's report. So now we have financial statement, auditor's report, board's report. Now these three things, okay, have to be approved in the annual general meeting. You might have heard this word, annual general meeting. We have this lesson also, AGM. In the annual general meeting, it has to be approved. And that's the reason in this board meeting only, we finalize the date of annual general meeting. So the notice of annual general meeting is drafted and placed along with this document. So now what we have? Notice of annual general meeting, financial statement, auditor's report, board's report. This whole bunch is called as annual report. You might have heard this word, annual report. Now this annual report is sent to the members 21 days before the annual general meeting. And in the annual general meeting, these documents are read, and if any member has some question, they ask the question, and then these documents are approved. Am I clear? By whom? Beta, by members. Am I clear with this? Understood? So we were at board's report. So board's report is prepared now. In that board's report only, board of directors recommend dividend. They mention the board of directors recommend 10% dividend. Now in the annual general meeting, members meeting, okay, the members present have to vote. Majority of votes should be in favor, and if majority of votes are in favor, the dividend is declared, and then members get that dividend. Am I clear with this thing? Sir, if majority of votes are not in favor, then dividend is not declared, the money is still in the company's P&L account. Am I clear with this thing? Understood properly? Am I clear? Everyone? Yes? Okay. So what is written here? See, final dividend is declared at the annual general meeting. I'm writing AGM. I hope you'll understand. Second, beta, who declares it? Who declares a final dividend? Members in the members meeting. That is the reason it is declared in AGM, because members have to approve it. Am I clear? Basically declared by members. Declared by members. Okay. Sir, who recommends dividend, final dividend? Board of directors. Okay. Recommended by BOD. BOD means what, beta? Board of directors. In which beta report, beta? Board of directors report. Am I clear? Okay. Now, sir, what do you mean by interim dividend? Anyone has question? Anyone has question? No, not interim and all. Up till final dividend, anyone has question? I have a question. You know why? What question? Sir, I told you if in the AGM annual general meeting, if majority votes are in favor, then dividend will be declared. But sir, in case it is not in favor, then dividend will not be declared. Sir, why would anyone say no to it? You are getting money now. Why would members say no to money? But then they will not recommend only. Obviously, na? Yes. But the reason is also the same. Beta, I'll give you an example of this. Why would any member not go for dividend? He doesn't want dividend. In small companies, all these things don't happen. But in big companies, the big investors are there, like ICAI Bank, HDFC Bank, big mutual funds. So their representatives come in the meeting and they do all the calculation and come. And then beta they vote, should the dividend be given or not. Okay. So I'll tell you, if you understand, it's fine. If you don't understand, then too it's fine. No problem. Okay. Yeah. Capital appreciation. Good. I'll tell you. It all depends upon two values. There is one concept of intrinsic value of dividend and extrinsic value of dividend. This will all be there in CA final of dividend. Now see, example, company declares dividend. Board of directors recommend dividend of ₹10. Now, if you take this, if the dividend is declared, members will get this money. And if they invest outside, they will invest outside. Two options. They will invest. After investment, after a year, this 10 rupees will become 12 rupees. How much rupees, beta? 12 rupees. That is called as extrinsic value of dividend. But second option is that if you reinvest, invest means this is a reinvest, I'll erase this. If the company does not give dividend but company reinvests, okay, in the company only, okay, so it will get rupees 13. How many beta? 13 after 1 year. This 13 beta is intrinsic value of dividend. Now tell me, extrinsic is more than intrinsic or less than? Extrinsic is less than intrinsic value. Am I clear with this thing? So in this case, better tell me, it is better to take the dividend or to reinvest in. So at that time members will vote against it. Am I clear? But if it is opposite, then it is better to take the dividend. Am I clear with this? Understood properly? Okay, so all these calculations are being done by big charters and all who will be present in the AGM. And if you are handling the AGM beta, they will give you their calculations. An example, their extrinsic is more than intrinsic. They'll ask for dividend, but or else not. So you will also have your own calculation. So you will have a debate in the AGMs and all. This I have seen happening. Am I clear with this? So can you imagine beta handling a AGM, how much knowledge you need to have? Okay, and this is the starting point of everything, what you are attending now lectures. Okay, everyone understood? Clear? Okay. Sir, what do you mean by interim? What is the meaning of the word interim? Interim means in between, and intrinsic means in between. Now, so it is written, it is declared between two AGMs. That means it is not declared at the AGM, it is declared beta in between two AGMs. Who declares it? You know, board of directors only. Who declare it? Board of directors. So no recommendation. The board meeting only they will declare this dividend. Sir, why would they declare? There are many reasons. First, I will write you for you. It is declared by board of directors. Third, no recommendation required. No recommendation required. Okay, because board will directly declare it. Now, why would board of directors declare it? I'll tell you. I'll give you option. There is an option. You tell me in which company you'll invest. Option A, option B. Both are working in the same industry. Okay. Option A is giving lot of dividend. Option B doesn't give you dividend. In which company beta you will invest? Generally option A. See, this is the foolish statement. Actually, you should invest in B, provided other things are also constant. Okay. See, option A, see, why do you invest in the company? So that the company will grow your money or give you back the money? Grow your money. Now, option A is giving you dividend. You know why? The reason is that it doesn't have that much business ventures. Option B is not giving you dividend. The reason is beta, it has lot of business venture. It wants to reinvest the money, reutilize the money. And then it will give you capital appreciation. 1 rupee ka share, like that Wipro. Okay, it will become 80 crores. So which is a better company beta? B. But generally people have this dividend, they don't give dividend, this company gives. Okay, let's buy A. So what happens beta? People start selling B company shares and start buying A companies. So here beta, supply is more, demand is less, the price will go down. And board of directors like, who will make this foolish people understand? One person will make explain. So many people are there. Who will make them explain? So it's better to give dividends to stop them. Okay, at least they'll stop. So basically the demand will be there. Did you understand? Am I clear? Just to stop, because you cannot explain everyone intrinsic, extrinsic and all. Because investors, they are not financially literate. So they better give the dividend. Am I clear? One company I still remember in 2022. Chennai based company. I don't remember the name exactly. One of my students had invested. That company gave how much dividend? You know, generally dividend is given at 5%, 10%. That company declared dividend at interim dividend 9,000%. 9,000% was the dividend declared. I was shocked. So tell me beta, should you invest in that company? No, because it is flushing out the money. Am I clear? Understood? So this is the reason. Clear? Everyone? Okay. Understood? Yes? Okay. Just remember one thing. Final dividend is declared by members. No? Acha. Sir, when the AGM comes, can the members increase the rate of dividend? You know, your board of directors recommended 10, no, we want 12. Can they increase it? No. Can they decrease it? Answer is yes. Practically, you don't decrease it also. You just have to say yes or no. But in the as per the books, yes, it can be decreased, but it cannot be increased. Am I clear? Okay. It is declared by members. Okay. So after declaration by members, can you revoke the dividend? Can the board of directors revoke it? No. So final dividend, fourth point, cannot be revoked. Cannot be revoked. Means cancelled. But interim dividend, can it be revoked? Yes. Can be revoked. But practically nobody revokes it because majority of shares are with board of directors. What happens now in interim dividend? Just understand. Example, this is the month of, which month? August. In the month of August, beta, interim dividend was declared by board of directors. Okay. Whenever the next AGM comes, example September 30th, there was a AGM. In the AGM, beta, that interim dividend has to be approved by the members. Means board of directors have to give answers why they declared interim dividend, and majority of members should vote for that. If it is not voted, then it will be revoked. As good as that. Am I clear with this thing? Understood? But practically it will not happen because I am telling you the directors present there have majority of votes. So practically up till now I have never seen anything being revoked. Am I clear with this? Understood? Yes? Okay. So this is that part. So I hope I am clear with final dividend and interim dividend. Just a second. Yeah, share price sometimes may decrease. Yes. Yeah. It depends upon. No, both will not be merged. You may get only interim, not final. You may get only final, not interim. You may get interim and final also separately. Rare possibility, but yes, it is a possibility. But you will not get one dividend telling it is interim and final both. No. Am I clear? Yes? Okay. Now, so we understood better classification of dividend on the basis of what? Time. Now, second is classification of dividend on the basis of shares. It's a very simple one. On which shares you are getting dividend, we classify as per them. On the basis of shares. See, first is equity dividend. And second is preference dividend. Sir, it's very simple. Equity dividend is given on preference shares, right? Equity dividend is given on preference shares, right? No, sir, it is given on equity share. What are you talking? Very simple. The first point, equity dividend is declared on which shares? On equity shares. Preference dividend is declared on which shares? On debentures, right? Are sir, preference share, what are you doing, sir? Is declared on preference shares. Okay. Before going ahead, online students, these people will obviously tell me, online people tell me how many of you don't know what is equity share and preference share. I'll explain it. It is there in your lesson number 4 again. Don't worry. Okay. Interim dividend declaration, sir. Interim dividend is dividend declared by the board of directors in the board meeting whenever they think it is necessary. One example I gave you why. One more example I'll give you. It is not declared by members. It is not declared at the annual general meeting. It is declared in between the year. Okay. By board of directors in the board meeting. One more example. Example, company had contingent liability. Example, someone had filed a case against company, and if the company loses that matter, company has to pay 2000 crores. It is contingent liability. The company did not pay dividend in any year, but the company won the matter in the Supreme Court. Now there cannot be any appeal. So basically now, is there any contingent liability of 2000 crore? No. And in order to say thank you to the members, board of directors declared this dividend. This also can be possible. Am I clear? Understood, Jairam? Yes? Okay. How many of you don't know equity shares and preference shares? Just raise your hand. Just raise your hand. I'll explain it. Anyways, it is there in lesson number 4 properly. But then to rough explanation, obviously, I will give you. How many of you don't know what is equity and preference shares? Everyone knows? Okay, just for your understanding, equity share means a share which is not a preference share. Very tough explanation. It is share which is not a preference share. Sir, then what is preference share? Sir, which is not equity. Then no, not like that. Preference share means a share. Like when can I say that I have a preference share? If on my share I get 2 preferences, any one of the 2 preferences, then I am a preference shareholder. First is preference on payment of dividend. First example, these people, right hand side people will get dividend. Okay, like example, forget. Like example, first beta, you people, online people will get dividend. And then if anything is left, money is left, then beta this offline people will get dividend. So you are preference, they are equity. That is payment of dividend. Second, repayment of capital. Preference in repayment of capital. When the company winds up, after selling the asset, paying the debts, you have to return, the company has to return the capital. So first, you online people's capital is repaid. Then this offline people's capital is repaid. So your preference, they are equal. Am I clear? Any one preference. So basically, did you understand? So if you as a shareholder get any one of the preference, you are a preference shareholder, or else you are a equity shareholder. Am I clear with this thing? Practically, who's the owner of the company? Equity shareholder or preference shareholder? Equity shareholder. Preference shareholders are not owner, they are not members. Am I clear with this thing? That's the reason they will not get any of the right which the equity shareholders will have. Am I clear with this thing? Like just for your understanding, equity shareholders are like your family members, they'll always be there with you. Preference shareholders are like guests, one or the other day they will leave. That is called as redemption of preference. If they don't leave, guests don't leave, you'll make them leave. I know that. You'll do something. But until they are there at your home, who gets all the preferences? The guest. Am I clear with this thing? Yes or no? Like this has happened with us. Like example, 3 guests come to our home. The mummy will be like, bring 6 samosas and 2 samosas for you people also, me and my brother. 8 samosas bring. So first everything is kept in front of them. First everything is they will have. Then we'll see from the kitchen, oh my god, your 5 samosas they already had. Okay, so the tension begins here. Yes or no? So once they leave, anything left, it is with us. So we are equity, they are preference shareholders. Am I clear with this thing? Online stupid people, did you do all these things? We have done. Okay, me and my brother. We used to just wait because there are 2 benefits. First thing, the whole food is ours. Second, but while going, they give money also. Yes or no? Clear? So I hope you understood equity and preference. So basically, equity dividend is a dividend declared on equity shares. Preference dividend is a dividend declared on preference shares. Okay. Can anybody tell me, sir, in both of this, whose dividend rate is fixed? Preference or equity? Preference. Okay. So basically, in preference shares, okay, or preference dividend rate is fixed. Like if you say na 11% preference shares. So what do you mean by 11% preference shares? 11% dividend will be given to you every year. Am I clear? Acha, I have one question. Online students also answer, you people also answer. This 11% is on what? Okay, face value. And online students answer, 11% is on what? Because this is a big confusion even now people have. 11% is on what? Earnings after tax. Yes, 11% is on the face value of shares, bacha. Am I clear? So whatever your face, like Reliance Industries Limited, 1500 rupees is the market price, but face value is 1 rupee. So basically, dividend 11%, 8% is on the face value of share. Am I clear? Okay. I will be like, sir, then if I purchase 100 shares of Reliance of 1500 rupees, okay, that is 1.5 lakhs. And if they declared 10% dividend, so 10%, so how much is the total face value of share which you hold? 100 rupees. 100 rupees, 10% on 100 rupees, that is 10 rupees dividend you will get. Sir, I don't want the share, sir. 1.5 like I invest, I'll get 10 rupees. Yes, but that is the point. Nobody focuses in India or anywhere on dividend. All focus on what beta? Capital appreciation of the price. Am I clear? Very good question, Jairam. If they do not have enough profit to give 11%, then they will not declare. Yes. See, understand. One very good question. I'll connect to this. Sir, equity share we understood. Final dividend, board of directors recommend, members approve. Interim dividend, board of directors directly declare. Sir, what about preference shares? Preference share 11%, sir, you are telling example. So 11% by default they'll get? No beta. Understand. 11% is on face value, but what is this 11% dividend? Dividend is nothing but distribution of profit. If they don't have profit, can they give it? No. So basically here also board of directors will declare and they'll get it. Am I clear? Preference directly board of directors declare. But one good question I'll tell you, sir, in case company has NPAT, earnings after tax, okay? So basically example, company has NPAT or earnings after tax. So directly is the company obliged to pay preference dividend, or there also board of directors have to declare? What do you think? Did you understand my question? Company has profits, so they have to directly pay. So or there also board of directors have to declare, then only preference shareholders can take. Yeah. Answer no. It depends upon beta articles of association. This is very minute point. It is not in your syllabus, but I am telling you because the question came. That's the reason reading AO is very important. But if the articles of association mention that net profit after tax will be directly applied for paying dividend, then it is the absolute right of preference shareholders to claim that dividend. But if the AO is silent, then preference shareholders also have to wait till the board of directors declare, or else they can't claim. Am I clear with this? Understood? Okay. Equity dividend beta rate is fixed or it is not fixed? Not. It depends upon management. Rate is not. Yeah. Okay. See, Ajay, so tell me, will it be like more the profit, more the dividend, and less the profit, less the dividend, no profit, no dividend? Is it correct? More profit, more dividend, equity dividend. More profit, more dividend, less profit, less dividend, no profit, no dividend. No, it is not correct. It can be anything. Management can decide anything. Management may also decide that even if the company has lot of profit, they are not giving any dividend. I'll give you example, practical case. I used to handle this company during my articleship. The name of the company is ENIL. Have you heard about ENIL? Entertainment Networks India Limited. Okay. Acha, have you heard of this company? No, na? Acha, have you heard about this Radio Mirchi? Radio Mirchi 98.3 FM, है or 93.5 FM, something I don't remember the frequency now. So Radio Mirchi is a product of ENIL. Okay, it has a big market share in radio broadcasting in India. So Times Group, basically it is owned by Times of India, Times Group. So ENIL is there, this is what I am talking about 2011 when I was doing articleship. ENIL had earned around 287 crore, they had earned 380 crore, so sorry. They had earned 380 crore profits. 380 crore in 2011, it is as good as 4,000 crore today. But the board of directors did not recommend any dividend. You know why? I'll tell you the reason. See, because and in the AGM one lady stood and she asked, why are you not recommending dividend? This is the answer what they gave. In India, Radio Mirchi does what beta? Broadcasting. है ना? Radio broadcasting. The radio broadcasting approval is given by TRAI. Who gives beta in India? TRAI. Have you heard about TRAI? Telecom Regulatory and Authority of India. Telecom Regulatory Authority of India. Now TRAI gave radio broadcasting approval in 3 stages. Okay. Stage 1, Stage 2 and Stage 3. Now Stage 1 and Stage 2 now approval was given at a point of time where radio broadcasting was allowed in India, which told that radio broadcasting can be done in English and Hindi language only in India. Am I clear? You know, old radio you might have heard about somewhere, like a straight drive by Sachin Tendulkar, a classic 4, one bouncer by Mr. So and so. Yes or no? Okay, in Hindi it is to Shandar Chauka. You might have heard like this, Sachin Tendulkar Dwara. So that is stage 1 and stage 2 approval. Stage 3 approval was given in 2011, where it was told that in India you can do radio broadcasting in any Indian language. Am I clear? So you might have seen now, you might have experienced also, like you are in Karnataka. Radio broadcasting is Kannada. The moment you cross Kannada and go to Maharashtra, it starts in Marathi. You cross Andhra, cross Karnataka and go to Andhra Pradesh, it starts in Telugu. So it is because of the third stage approval. Radio Mirchi was the first company who did this. First mover advantage they took. And for that they had to do satellite configuration. Satellite is not ours. It was of China-based company. So basically, we have to pay money to them. So for that they required some 250 crores or odd at that time. So they earned 380 crores, but did they recommend a single rupee of dividend? No, because they wanted this money and they will be giving capital appreciation on that. So this answer was given by board of directors and the lady was like, okay, correct. So see, even after earning huge money, did they give any rupee of dividend? Am I clear? It decides upon management. Now, sir, is there any further classification of equity dividend? No, there is no further classification of equity. No further classification. No further classification. But sir, is there any further classification of preference dividend? Answer is yes. Preference dividend further classification is there. Now what is that? Preference dividend is further classified as in two parts. First is cumulative preference dividend and second is non-cumulative preference dividend. What is the first one? Cumulative preference dividend and non-cumulative preference dividend. It's very simple, guys. Cumulative preference dividend is declared on cumulative preference shares and non-cumulative preference dividend is given on non-cumulative preference shares. Now what do you mean by cumulative or non-cumulative? See, why would anyone buy preference shares? Tell me, what would be the purpose? Dividend every year, because capital appreciation will not happen because redemption value is fixed in preference shares. So everyone focuses on dividend. So cumulative preference shares means what, you know, like dividend will be cumulated over the years. Every year fixed dividend you will get, but in any year you did not get. I told you the reason also. Profits are not there. Board did not declare. So next year you will get that dividend. So that dividend, arrears and dividend will be cumulated and paid to you in the forthcoming years. Am I clear with this thing? But in non-cumulative dividend, what happens now? If you did not get in a particular year, so forget it. Okay, now you will not get in the next years. Am I clear with this thing? So, sir, people will be, sir, why would anybody buy non-cumulative preference shares? People would buy because, example, Tata Sons Private Limited issues non-cumulative preference share. Because of the repute, people will buy. Obviously, am I clear with this thing? And nothing is told that it is non-cumulative only. Am I clear with this thing? So, see, cumulative. Sorry, nothing is told it is cumulative. Okay, but the companies now issue non-cumulative only. No company issues cumulative. I'll tell you the reason also later on. So now only I'll tell you. Because if you go for cumulative now, before we issue preferences, you have to take members approval. Members will not give approval only. Because you are giving dividend from the reserve. That reserves belong to equity shareholders. So they'll not give approval only. So nowadays it is non-cumulative. So example, in the year 2017, I purchased preference shares, company had issued. And there was profit and dividend was given to us. 2018 there was no profit, there was loss, so no dividend was given to us. But 2019 there was profit, the dividend was given to us. We'll get better 2018 also plus 19's dividend also to us. Dividend will be cumulated. Am I clear with this thing? Then at the time of redemption you will get, maybe next year's or at the time of redemption, but you will get, don't worry. Non-cumulative, obviously 2017 profit dividend is there. 2018 was loss, no dividend was given. 2019 there was profit, dividend was given, but here you will get only of 19. Am I clear with this? 18 you will not get. So I have a very funny phrase for this. Cumulative dividend will be accumulated and paid to you in the forthcoming years. Non-cumulative dividend, if you did not get in a particular year, forget it like your X and move on. Am I clear with this? Understood, online people? Yes? So see. So this is about cumulative and non-cumulative. So I hope you understood, everyone understood classification of dividend on the basis of time and on the basis of shares. So the introduction part is completed. Anyone has doubt? Anyone has any doubt? Anytime they can give. Yes, it is on them. Some companies prefer giving before AGM. Some companies prefer giving after AGM, because if they have to give before AGM, they prefer giving in final dividend only, like that. Done? Okay. Now we have finished the introduction of this lesson. I hope everyone understood the introduction. Now we are going to start with the law, where the law comes into picture. Okay, and on the first page of this lesson, in relation to interim dividend, many things are written. I have not told you now, because as and when I'll keep on explaining the sections, you'll understand it. Okay, let's start. The first big section is section 123. I say this is the mother section of this lesson. Mother section, because all the other sections are connected with this section. 124 is connected with 123, 125 is connected with 124, 126 is independent, 127 is also connected with 124. If you don't understand 123, you will not understand the other sections. So mother section, if you want to leave this section for the exam and go, leave this lesson better. Yes, to be fair. So basically heading is payment of dividend. What is the heading? Payment of dividend. Okay. Now let's understand. I have sorted it in points so that it's very easy for you to understand. First is sources of dividend. Sources of dividend. So dividend means you are paying cash. So from where are you paying cash? From where are you paying dividend? Beta, what is dividend? Beta, distribution of? Obviously. The first source is beta current year's profit. Can you pay it from the current year's profit, P&L account? Yes. So current year's profit. Current years means as of 31st March. Current year's profit. Guys, can you pay from past year's profit? Yes, that is reserves, free reserves. Yes. So past year's profit. Okay, but beta, when you talk about past year's profit, that is reserves now. So two reserves cannot be utilized. Okay, it is written two kinds of reserves cannot be utilized. Which two kinds? Beta, it is written notional gains or unrealized profits cannot be utilized. Like unrealized profit, I'll give you example beta. Have you heard about revaluation reserve? Have you heard about revaluation reserve? Like you revalue your assets and liabilities and then you get a profit. You put it in revaluation reserve. Can you use it for paying dividend? No, because did you get the profit now? No, you'll get the profit when you sell the asset. Now you don't have. Okay, that's the reason this cannot be utilized. Okay. Similarly, notional gains, CRR, capital redemption reserve. Have you heard about CRR? CRR cannot be utilized. I hope everyone has heard about CRR. Where CRR comes, you know, have you done this lesson in accounts? When is AGM conducted? Generally in the month of September. Okay, August, September. I'll tell you, talk about that in lesson number 7, Sudarshan. Everything properly. Okay, so CRR also cannot be utilized. You know, CRR is created, you might have studied when you do redemption of preference shares. Yes or no? At that time CRR is created. Debentures also. When you redeem beta buyback equity shares, at that time also you create CRR. Guys, tell me, I have one question now. Online students, have you heard about CRR, Capital Redemption Reserve? If yes, then give a thumbs up. Foundation you had, na? And I think graduates also have done redemption of preference shares in graduation. So when you redeem preference shares from free reserves, equivalent amount has to be transferred to CRR. And CRR can be utilized only for one purpose. You know which purpose? Bonus issue. Okay. Yes. Everyone? Okay. So I have one question for you guys. Why CRR is created? And why CRR can be utilized only for bonus issue? Now it's a technical topic which I am discussing. It's not required here, but it will come in redemption of preference shares. But now only if I clear it, it is very simple for you. Tell me why CRR is created and CRR can be utilized only for bonus issue. Increase the number of shares. And online students can also answer. My question is why CRR is created when you redeem preferences from free reserves, because it will give answer why CRR cannot be utilized. That is the reason. Okay, why CRR is created and why CRR can be utilized only for bonus issue. Okay, notional.
What are the actual money?
Oh, great. I'll tell you. See, very good answer. Very good answer. I'll make a balance sheet and tell you. Just because I want to teach you why it cannot be utilized. Do you have a scale? Anyone has a scale? Just give me one scale. Huh? Thank you. This will be your interview questions and all. See, I'll write here liabilities, amount, fees, assets, rupees, equity share capital 100. Example, preference share capital 100, free reserves 100, other liabilities 100. Total is how much? 400. Example, my fixed asset is 300, cash is 100. Just simple balance sheet I am making. 400. Now example, we redeem preference shares from free reserves. So preference shares will go. Notionally free reserves will also go because you are redeeming from there. But you have to pay cash also during redemption. So cash will also go. Now here how much will be left? And here 200. So college faculties, just for your understanding, they say, hey, now the balance sheet will not tally. So obviously they will create a reserve. For that we will create a reserve, CRR, and the balance sheet will tally. This is what, not actually example, logically correct. But what is the reason? I'll tell you. See, there are 2 points and one beautiful question one student asked me here. See, this free reserves belong to whom? Equity or preference shareholders? Equity shareholders. We are giving their reserves, we are utilizing their reserve paying to preference shareholders. So obviously we have to give them some reserves. So which reserve you give, beta? CRR. Am I clear with this? This is the basic reason. So this is the reason why we create CRR. Now one more reason I'll tell you. Second, sir, why CRR can be utilized for bonus issue only? Bonus issue what? Free of cost we give shares. The reason is that beta, generally we create reserve whenever we have profits. when the money comes in the company. Here beta we created reserve by paying money. So in front of this 100 rupees, is there any cash available? So can we pay dividend out of it? No. Do you understand? Can we pay to creditors? No. We can do only one thing. Okay, convert this CRR into equity share. That is nothing but bonus. So this 100 rupees will go, and then this equity share capital will become how much beta? 200. Now beta balance sheet will tally at what beta? 300. Am I clear with this? Understood? Now one student asked me one question. Sir, why to do all these things? When we issued preference share, what journal entry we passed? Bank account debit to preference share capital. Correct? 100 rupees, 100 rupees. Sir, when we redeem, we'll do this opposite entry, na? Preference share capital account debit to bank. Khatam na sir, why are you doing CRR, free reserves to CRR? Yes or no? We make na free reserves to, why to do all these things? Answer beta, if you do this thing, okay, do, no problem. But what law tells na, your creditors have given loan on the basis of your capital. Okay, and capital denotes your assets. So that tomorrow beta at winding up they can sell the assets and take their money. So they have given your loan on the basis of your capital. So your capital should not fall down. See, by redemption of preference share, your capital is falling down. But because of CRR, it is coming back again. Yes or no? We are again creating it again. So tell me, is the capital actually getting down or no? For some time it is going down and again it will come up. Again it will come up. That is the reason creditors' interest is not affected. Am I clear with this? Okay. So that is the reason we create CRR. You know why? Because if we don't create CRR, na, this will be the journal entry past, yes or no? Now this is nothing but now will the capital come up? No. Your capital is going down. So this is called as reduction of capital. What we call beta? Reduction of capital is a big thing. For that beta, section 66 is to be followed. For that court approval, it will literally take 1 year. Because court will give you approval after 6 months only. That is internal reconstruction called. We call it as internal reconstruction. So this is a big part. Redemption of preference share can be done in 15 days. But basically this will take literally 6 months to 1 year. So that you don't end up falling under section 66. That's the reason section 55 tells. Okay, whenever you redeem preference share, there are two options. First, issue new equity share. So capital will remain intact again. Or do it, or if you are doing from free reserves, transfer equal amount to CRR so that the capital will come again up. Am I clear with this thing? So creditors' interest is not affected. Am I clear with this? You understand why CRR is created? And second, why it is utilized for bonus. If you don't create CRR, boss, you have to follow which section? Section 60, beautiful section, lesson number 2 I'll teach you. Okay, am I clear? Everyone. So that's the reason it is told beta, CRR, okay, cannot be utilized to pay dividend. Did you understand A and B point? Everyone, online students. It is utilized for bonus because the time due. Yes, correct. Correct. The capital will remain intact. Am I clear? Now see, beta, can you use both current year's profit and past year's profit? Answer is yes. Na? Like if you want to buy chocolate, you will use your money. But if your money or you don't have money, you will use papa's money. Can you use both your money and papa's money? Thodu? Yes, small. Okay, so both A and B. And D point is grants from government. Now what is grant? These are free grants from government. Okay. Now understand there are two types of grants. One type of grant can be utilized only for a particular purpose, not that grant. These are free grants issued by government, generally to government companies and all. Okay, so that can also be utilized for paying dividend. Grants from government. So what are the sources beta for paying dividend? First, current year's profit. Second, past year's profit. Third, both current and past. And last is grants from government. I hope I am clear with this. From debts. No. It is distribution of profit. No. It's simple. Dividend is distribution of profit. So can you pay from capital? No, obviously, because if you pay from capital, it is reduction of capital again. No. See, whenever you borrow money, it should be only for a particular purpose, and borrowing for the purpose of giving dividend will not be allowed. Am I clear? Understood? Okay. So we'll take 5 minutes break and then we will continue on this. Okay. Okay, before 5 minutes break, one topic I'll cover, then we'll take 5 minutes break. A very important topic. I hope up till now first point is clear. Now second point. It's a very, very important point. Now what is this point? This one line is there now. Why important? This one line has replaced around 40 pages. One line has replaced 40 pages. Now what does this say? A company may transfer in the company may transfer any percentage of net profits to reserves before declaring dividend. A company may transfer any percentage of net profits to reserves before declaring dividend. Sir, what is important? You will not understand the importance of this now because you don't know the history of this line. See, when Companies Act 1956 was there, which act beta? Companies Act 1956. It came with a concept of transfer to reserve rules. What was the concept? Transfer to reserve rules. Okay. Now these rules were made for the protection of creditors. Now what these rules used to tell, I exactly don't remember the percentage, okay, but I know that these rules were there. The rules used to tell that, boss, if you are giving this much percentage of dividend, this much of net profit, this percentage of net profit you have to transfer to reserves, and from the balance you can pay dividend. So mandatorily out of your net profit some amount you have to transfer to reserves only. For example, if you are declaring 10% dividend, 10% on face value, then beta mandatorily 12.5% of net profit has to be transferred to where beta? Reserves. So example, you earn 1000 rupees profit. So 12.5 means beta 125 you have to transfer to reserve. From the rest 875 you have to pay dividend. And if that 875 is in this 10%, fine, no problem. Am I clear with this? In example, you are paying dividend of 15%. Then 17.5% of net profit has to be transferred to what beta? Reserves. 20% you are paying dividend. Then mandatorily beta 22.5% of net profit has to be transferred to reserve. From rest you have to pay dividend. This was for protection of creditor. Don't empty your amount. But in the new act it was told that the drafting committee told that the board of directors know their company better than us. If it is a profit making company, it can pay dividend any amount. Who are we to tell them? That's a good company, they have a lot of free reserves, they earn this year also profit, let them pay dividend, entire amount let them pay dividend, who are we to tell? So then beta, in the new act beta, this transfer to reserve rules got abolished. Now it is written, a company may transfer any percentage of net profit to reserves before declaring dividend. So 100 rupees they earn, entire 100 rupees they want to transfer to reserve, 0 rupees dividend, can they do it? Yes. Entire 100 rupees they want to give dividend, 0 rupees to reserves. Is it okay? Am I clear? So transfer to reserve rules was 40 pages. I still remember I've read it in my office during articleship. And after this beta, when I became a C, I became CS in 2012. In 2013, the law was changed. They told this law will be changed. It's fine, no problem, happens. Am I clear with this? Yes? Okay. This was an important point. So 5 minutes break, then we will continue. Online students, any doubt? No doubt? Sure? Give me a thumbs up if you understood these things. Everyone, give me a thumbs up if you understood. Great. Offline as well. Let's continue. Let us continue. Okay. Now, a very important topic we are discussing, that is rule 3 of declaration and distribution of dividend rules. Very important rule. I'll tell you. See, let me write it first. Rule 3 of declaration and distribution of dividend rules 2014. What is this? See, this is nothing but payment of dividend in case of first no profits or inadequate profits. Let's understand what is this. Okay, I'll ask Suprita, or who's there? Neela, you answer. Generally we talk, you ask questions. Neela, example. You are in your articleship and your stipend is 5,000 rupees. Can a private company take over public company? Yes, obviously. Your stipend is 5,000. Okay. Generally we get stipend that much, 5,000, 7,000. Now you went to a mall and there was a beautiful dress. You liked that dress, but you saw the price tag, 45,000. Will you buy that dress? Tell me, yes or no?
No, sir.
No, obviously not. Because if she purchases, her mommy will be like, how much you earn and how much you spend? Yes or no? But Neela, the same thing if I change the question. That boss, in case your salary, you became a chartered and your salary is 3 lakhs per month in hand. Okay, in your reserves, bank account 50 lakh rupees is still there. Now will you buy it? Yes or no? You loved that dress. Will you buy it? Tell me. Maybe yes. So, and in case if the so what I'm trying to tell, in case company has lot of money, they are making huge profits and they want to pay dividend, then better, what does the second point tell? Company can pay dividend without any limit. Let them pay, na, they are earning. But in case if you are a CA final, you have cleared CA final, 3 lakh rupees salary, you are purchase 45,000. That time also mommy will scold you. Mommy will be like, only one dress you can purchase, you don't have money for mommy. Why not for me? Yes, that time also, but you can spend, obviously. But example, the dress, like your article only 5,000 and the dress price is 1,450. Maybe better you will purchase, yes or no? That means question is on the same parallels. Sir, if the company is earning huge profit, can the company pay dividend without any limit? Yes. Second point, company may transfer, anything they may transfer, because they may not transfer anything, they can give dividend, entire amount of profit is dividend. But if the company has not earned profits, or the company has earned inadequate profit, can a loss making company pay dividend? Answer is yes. From where? From reserves. Sir, if the company has inadequate profit, what do you mean by inadequate profit? Company earned 200 crore, but company wants to pay dividend 500 crores. So that is inadequate profit. Can company pay dividend? Yes. From where? From reserves. But in such situation, you can spend money, you can take money and pay dividend. But better, can you spend dividend? Can you pay dividend at any rate, or there would be limits? There would be limit. There are restrictions. So rule 3 talks about that restriction. Sir, if your company is not earning profit, it is into loss, not a NPO. Okay, your company is a profit making company, but it is into loss. Or if the company has inadequate profit, so company has to utilize reserves and pay dividend. So there are 3 restrictions given. You have to follow these 3 restrictions and pay dividend. You have to respect all the 3 restrictions. On this question, some will also come. We'll solve that sum. And then only you can pay dividend. Actually 4 restrictions are there. 4th one is a hidden adjustment, which I'll tell you after we complete this. Okay. So which are the 3 restrictions which we have to follow? In case beta, in which case beta, a company which is into loss or inadequate profit making company wants to pay dividend. First restriction. The rate of dividend shall not exceed the average rate of dividend declared in the preceding 3 years. बताता हूँ मैं वो. Sir, the rate of dividend shall not exceed the average rate of dividend given in the preceding 3 years. So like example, this year I have to give dividend and my company is into loss, but then too I have to give dividend. Then beta, I will take preceding year P1 plus P2 before that year plus P3. Okay, this is which year beta? 2025-26. Are you are in which year by 25-26? So I'll see beta 24-25, 23-22, sorry 24, then 22-23. In this year how much dividend was given? And beta, I'll take the average. Average means what beta? Divided by 3. So example, P1 it was 10%, P2 it was 11%, P3 it was 12%. What is the average? It is 11%. So this year 25-26 I can pay dividend not exceeding how much beta? 11%, not more than this. Am I clear with this? Am I clear, everyone? But very important, see what is very important here. Which color should I take? Can you see this? This is not applicable beta. This point is not applicable in case company has not declared dividend in each of the preceding 3 years. Did you understand your question? Who somebody asked the question? That means beta, example, P1 they declared dividend, P2 they, P3 they did not declare. So have they declared dividend in each of the preceding 3 years? No. Then first point is not applicable. I'll give you a question also. In your Telegram group you'll get a question. Okay, else we'll solve that question also. That's a homework for you. Tomorrow we'll see the solution also. Okay. Now, second point. What is the second point? Sir, from where? You don't have money. You don't have your money in your pocket. So you'll use whose pocket beta? Papa's pocket. That is reserves. So how much money you can take from reserve? Can you empty the reserve? No. So basically second point. Okay. Utilization of reserves. How much money you can use from reserves? But there is a limit. Maximum 10%. How much beta? 10% of paid up share capital plus free reserves. So example, in your paid up share capital there was 1000 rupees, free reserves 1000. Total is how much beta? 2000. 10% of 2000 is 200. 200 rupees will take from where beta? Free reserves. Am I clear with this thing? Clear? Now third. Sir, example, I took 200 rupees from the free reserves. Then I have like this 100. Okay, I took money from the free reserves. Then I have to look back into the free reserves. In the free reserves, na, some minimum balance should be there. How much balance beta? Whatever is your capital, paid up share capital, your paid up share capital is 15%, 15% should be in the free reserves. So example I took as per second point, 10% of paid up capital was free reserves. I took, then I look in the free reserves. Are in free reserves, capital 15% is not there. Then I have to put back some money, make it 15%, and from this money I can pay dividend. Am I clear with this? So post utilization balance in reserves should be minimum how much beta? 15% of paid up share capital. Am I clear with this? Understood? So I'll make a balance sheet here, okay, to answer to this. Okay, see. Which is available for paying dividend. Means it is not made for any particular purpose. Like example, dividend distribution reserves is there. So that is free reserves. Okay, but if it is debenture redemption reserve, is it free reserve? No. Capital reserve, is it free reserve? No. CRR, is it free reserve? No. Deposit repayment reserve, is it free reserve? No. In example, they will directly give you free reserves. Okay, if they give general reserve, that is also free reserve. Example, this is balance sheet. I'll change the ink. Balance sheet of Popat Limited. Okay, this is liabilities, amount, asset. Example, my equity share capital, paid up share capital is 100 rupees. Free reserves is 20. Other liabilities is 80. What is how where it will tally? 200. 200, correct? Fixed asset 100. Cash 100. Okay. Now guys, what is the question? Question is, being a CA, advice as to the amount of dividend under rule 3. Under rule 3 means what beta? Okay, under rule 3, that means it is no profit or inadequate profit. Now we have to see the 3 restrictions and tell what is the amount that can be utilized for dividend. First thing, tell me, is there any information as to the first point? No. So what we do beta? We ignore it. Ignore. What to do beta? Ignore. First point is not applicable. Now second point, how much money we can utilize from reserve beta? Maximum 10% of paid up share capital plus free reserve. How much my paid up share capital? 100 plus 20 is equal to 120. 10% of 120, 10% of 120 is how much beta? Rupees 12. This is the maximum amount which we can utilize, not more than this in any case. Third, balance in reserves should be how much beta? 15% of paid up share capital, that is 15% of 100 is rupees 15. Okay, so tell me, see now understand, 12 rupees is the maximum amount which I can take, but if I take 12 rupees minus, then beta what is the balance in reserve? 8. Okay, so I have to keep at any point how much beta? 15 rupees. So can I use 12 rupees? No. So considering, so second and third point, considering second point 2 and 3, what is the maximum amount which I can utilize beta? Only 5 rupees. Okay, answer is rupees 5. Am I clear with this thing? Everyone? Clear? Second and third. I have given an example now. Okay. I hope you understood, Akshata. Will all this become only? Yes, only when there is inadequate profit. Okay. Understood? Inadequate profit means I told you 200 crore you have won this year, but you have to pay dividend 300 crores. So for can you utilize that 100 crore from reserve? That is the question here. Okay. Achha, if I change the question a bit. Example, I make equity share capital 20 and free reserves 100. What will be the answer? Tell me. You tell me. Just interchanged. I just interchanged. ₹3. Okay. And what will be the answer, online students? If I change this, equity share capital I make 20, free reserves I made 100. Tell me the answer. All of you have to answer. Right, wrong doesn't matter to me. Okay. Quickly. Answer is ₹12. How much? How come you get 12, sir? See, first point will always be not applicable, same. Second point will also be 12. 20 plus 100, 120, 12. The 12 rupees is the maximum amount which you can give. Do you remember? Now balance in reserve, if you say, sir, balance in reserve should be 15% of capital. Now in the second case, 15% of 20, that is 3 rupees. The rest is 97 rupees. Can I pay 97 rupees beta as dividend? Answer is no. The reason is that why? Maximum amount which I can utilize is 12 rupees only. 10% of paid up capital was free, not more than that. So many people say, sir, you can pay 97 rupees. No. Okay, maximum amount which I can pay is 12 rupees only. Am I clear with this? Okay, understood? Clear, everyone? Online students, I hope you understood why it is 12. Yes, Priyanka, you understood? You answer 3 rupees. I hope you understood now. Yes? Great. Now, okay. Now you will get a question in Telegram, okay, in some 5 odd minutes. Yeah, or after the lecture. So you have to solve that question, okay, everyone. It's an exam question, last to last attempts question. So just solve it and come. Tomorrow we'll discuss also that question. Okay. Now, one point comes. This is a point which is easy to understand but difficult to explain. What is this point? See. Application of rule 3 in case of interim dividend. Application of rule 3 in case of interim dividend. What is this? See. Now I have two questions, beta. My first question is, sir, see, up till now we understood final dividend ke liye all these things are applicable. Sir, in case of interim dividend, is rule 3 applicable? What do you think? Is rule 3 applicable in case of interim dividend? I'll tell you, answer is yes. You know why? Can anybody tell me why? No, I am not telling how it will be applicable. My question is it applicable? Answer is yes, but why? Perfect, because of the definition. Final dividend includes interim dividend. All the rules and regulation applicable for final dividend will be applicable for interim dividend. Am I clear with this thing? So fine, rule 3 is applicable. But sir, how to ascertain whether rule 3 is applicable in interim dividend? Because in final dividend it's very easy. Your whole year's P&L is prepared. You know whether it's a profit making or loss making or inadequate. But sir, interim dividend is given in between the year, before the completion of financial year, before the final accounts are prepared. So how will we understand it's a profit making, loss making company? For that, no, for that better they have given one activity. Oh no, what is that activity? I'll tell you. See, first prepare the whole financial year. April, May, June, July, August, September, October, November, December. After December, what comes? January, February, March. Yes or no? Now divide this into quarters. Quarters means one quarter is 3 months, not any other quarter. First quarter 1, quarter 2, quarter 3, quarter 4. Am I clear? Okay. Now, what are the point tells? 4 quarters means 1 whole year. Now, first see in which month you are giving interim dividend. Example I am writing here. In the month of October, the board of directors are deciding to give interim dividend. Now, what you have to do? Now, you have to prepare an extract P&L, incomplete P&L, because year is not finished. That we call as extract. Starting from the financial year till the end of the preceding quarter in relation to the month in which dividend is given. Whether dividend is given in which month? October. So, for October, where does the last quarter end? September. Did you understand? So, what you have to do? You have to prepare a P&L, that is extract P&L. And as per this extract P&L, in this period, April to September, in our case, if there is a profit, then it is assumed that it is a profit making company. Okay, then give dividend at any amount. Give dividend at any rate. Rule 3 is not applicable. Then rule 3 is not applicable. Am I clear with this thing? Whatever you want in this period, you want to pay any entire amount, can you pay? Yes. Am I clear with this thing? But if in the same period, okay, extract P&L you prepared, P&L, if there is a loss, sir, oh my god, that is from April to September, there is a loss, then better it is a loss making company or inadequate profit making, loss making only. What is inadequate? Then better, then rule 3 is applicable, but only point first of rule 3 is applicable. What is the first point of rule 3, beta? Rate of dividend cannot exceed the rate of average rate of dividend declared in the last 3 years. But here also the same thing is here, beta, same thing here. It is not applicable. This is not applicable. Same thing. In case company has not declared dividend in each of the preceding. We'll read tomorrow about interim dividend from JKSC book also. In each of the preceding 3 years. Did you understand? That means, beta, if in each of the preceding 3 years, beta, dividend is declared, then only, beta, you have this rule is applicable. So, sir, if in the last 3 years dividend is not declared, so we can give dividend at any rate? No, then you cannot give interim dividend only. Am I clear with this? Understood? Final dividend following rule 2nd and 3rd you can give, but here you cannot give only. Am I clear with this? Am I clear? The extract of P&L starting from the financial year till the end of the preceding quarter, last quarter, in relation to the month in which you are giving dividend. I'll give you example. Example, in the month of November you are giving, so you will prepare P&L for April to September. December you are giving, so April to September. Jan you are giving, then April to December. Acha, if you are giving in month of May, then May. Then beta, you don't have to prepare. Then the last year's whole financial year will be the taken. Am I clear? Understood? If there is a profit or loss, that will be taken. It will be as good as final dividend. Understood? That is the reason it is told ki interim dividend can be paid from reserves, from the P&L account last year's, or from the profit earned in this period for which you are paying dividend. Three sources: reserves, P&L account, okay, that is last year's P&L, and third is beta from the profit earned during the period for which you have prepared the extract P&L. Am I clear with this? Understood? So I am writing here sources. In short I am writing reserves, P&L account. Okay, this is last year's, and profit from the P&L, from the extract P&L. Am I clear with this thing? Understood everyone? Yes, clear? Now one thing I forgot to tell you, okay, just one adjustment I am telling you, just one adjustment on the basis of which the homework question is there. Example, tell me you are paying dividend in case of no profit. This year's beta there is no profit. You did not even earn money to cover the whole of the expenses. So this year's outstanding losses in this situation is 2 rupees. How much beta? In this question. So tell me, will you pay dividend without setting of the loss, or you have to first set off the loss? First set off the loss. So what you have to do now, if there is given in the question this year's losses is this much, only one adjustment you have to do. What is that adjustment now? Whatever answer you can get in point 2 now, in our case beta how much loss was there? 2 rupees. So you have to deduct it by 2 rupees. So in our example what will be the answer beta? 10 rupees. Understood? After calculating, not from directly free reserve. It is for protection of creditors. Okay, because if you directly deduct from free reserves, but a lot of money, see, this is more like example, this is the amount which you can pay. Out of this also we are deducting, so we are protecting the creditors more. Am I clear with this thing? This is done for the protection of creditors. So first beta, don't do it from the direct free reserves. Whatever you answer you get as per point 2, the maximum 10% of PC plus FR, from there better deduct the amount, outstanding losses. Am I clear with this thing? In our JKSC book also we have a question, we'll discuss that also. Clear everyone? Understood? See, no. It is better for, because free reserves will be huge amount. Out of that also better we have taken 10% of PC plus FR, and from there we are deducting. So it is better for creditors. Am I clear with this? Sir, even last period results in loss and 2 quarters profit. Even last previous years results in loss and 2 quarters profit. Then also see, last year if there was a loss and you did not give dividend, so then fine, you cannot give dividend in this year only. Interim dividend can be given in case there is a loss. Sir, even last financial year, okay, even last financial result is loss and 2 quarters profit, then also then that's not applicable, because you have to just see whether you are giving interim dividend, the extract P&L you have to see. In that extract P&L, if there is a profit, then pay dividend. Last year's loss is there, better that it is not your concern. Am I clear with this? Understood? But yes, you have to set off that loss first and then pay. Am I clear with this thing? So whatever losses are that, first set off that and then you have to pay. Am I clear with this thing? Clear? Jairam? Understood? I was confused because your PYS I did not understand last one. Okay. Clear? Yes? Okay. Hit. So whatever answer you get, loss is there, from the second point deducted that. I am not writing here because you will be confused when you see the notes. That is the reason. That question also will do, don't worry. And last point, a very last point. I hope you understood about interim dividend. Yes. And last point, very important point. Nothing in this section is applicable to a government company. Which company beta? Government company whose entire share capital is held by government. So this rule 3 restrictions and all are not applicable to a government company. Rule 3 what? In fact whole section 123 is not applicable to a government company whose entire share capital is held by government, not normal government company. See, what is a government company? 51% of shares are held by government. This is not for that. This exemption is for a government company whose entire share capital is held by government. You know why? I'll tell you logic. First thing, so first legal reason. See, this thing rule is put for the protection of creditor, that creditor's money may not be paid. Just imagine a government company whose entire capital is held by government. It is as good as government. Will there be a possibility that the creditors would not be paid? No, government will generally pay to the creditors. Second, logic. But a logic is that these companies will not pay dividend only. You know why? See, government company entire share capital is held with government. So all the money is with whom, beta? Government. In fact, free reserve also. If they declare dividend, the money will go where, beta? Free reserves only. Are money is there only na in the free reserves. It will go only debit credit entry will be there. That is the reason these companies will not pay dividends. So that's the reason they have given exemption. Am I clear with this? But if it is a normal company, normal government company, 60% is held by government, will this exemption apply? No. Am I clear? I hope I'm clear with 123. Beautiful section. Okay. So, okay. So one question we'll do from the book. Okay. I'll show you. I have the question. Don't worry. I'll show the question. Oh, theory I don't want. $256. Oh, exact. Okay. See the question. YZ Medical, question number 2A. YZ Medical Instruments Limited is a manufacturing company and has proposed a dividend at the rate of 10% for the year 18-19 out of the profits of current year. The company has earned profit of 910 crores during 18-19. The company does not intend to transfer any amount to general reserves out of the profit. Is YZ Medical Instruments Limited allowed to do so? Why yes? A company that you have to write as per section 123. A company may transfer any percentage of net profit to reserve before declaring dividend. Am I clear with this thing? First one, though, you all can answer, I think. Okay, I'll write this point specifically again. Alpha Herbals, a section 8 company, is planning to declare dividend in the annual general meeting for the financial year ended 31st March 19. Mr. Chopra is holding 800 equity shares as on date. State whether the act of the company is according to the provisions of companies. No, why? Section 8 company cannot declare dividend. Very good. Huh? Okay. Okay. Only for first quadrant should we check last year's P&L? No. Only for first quarter, not quadrant, quarter. Okay. They might see we have written May 18 2 marks and many times they have asked. Good questions we have put. More than this stuff, I have put in that brainy questions pattern at Word document. Extract P&L should be prepared for 2 months or according to the company's decision. No, it depends upon in which quarter you are paying dividend. Example, you are giving in the month of February, then you have to prepare for three quarters. If you are giving in the month of April, May, June, July, then beta only first quarter you have to prepare. Am I clear? Okay. So I hope you understood this point. Okay. So tomorrow we'll start with 124. Tomorrow we'll finish this lesson. I think hardly will take 2 hours, not more than that. Then we'll start with lesson number 3. Okay, prospectus and allotment of securities, or lesson number 2, whichever is feasible. Okay, chalo. Bye bye. Take care. Bye students. Guys. We'll get the telegram question. Okay.
14.
JKSC is enough. Yes, yes, yes.